Good afternoon. This is Alan Heffling from Comstock Investments in Royal, Iowa. I'm here to do a webinar about the acreage and stocks report from the USDA this afternoon or this morning. I'm going to get right into it. We're going to go ahead and go into the screens. Okay, here I got to make sure I do that. Okay, share there. Okay, the stocks report came in this morning. The numbers are pretty well self-explanatory there. Corn stocks were a little bit larger than the average trade guess, 102 million above the average trade guess, but within the range, as you can see. Soybeans, on the other hand, well, let's go back to the corn stocks. The corn stocks on farm was 15% larger than a year ago. And obviously, we had a bigger crop last year, so our quarterly stocks were a little bit larger. And let's go to the soybean stock. Soybeans, they were 20 million bushels less than the average trade guess. A little positive news there, but it was within the range of the trade guess. And there was 18% more soybeans on farm than a year ago. The wheat stocks, so this was all wheat. All wheat came in a little bit above the average trade guess, roughly about 204 million bushels, 204 million bushels more than a year ago. And one thing about the wheat stocks, off farm wheat stocks are up 28%. Actually, more corn stocks. Okay, off farm wheat stocks are up 20. So basically, that tells me off farm wheat stocks was off 28%. That means the elevators in Kansas and Nebraska have more wheat in them than the farmers own. So maybe that's why the wheat is rallying a little bit. Go next to the planning report. This got a little interesting here. Corn came out at 90.8 million acres. That was 900,000 more acres than the June estimate. A little bit right below the high end of the range. That was kind of a surprise to the market today. Soybeans, on the other hand, this is where people were looking for 1 to maybe 2 million more acres of soybeans than the March intentions, but it came out a little bit above it, not much, but that was kind of I wouldn't call it bullish, but the friendly side of the stocks report for the soybeans. All wheat acres came in 400,000 less than the March intentions. We knew that the wheat acres were going to be off. Basically, 100 years ago, we had the small wheat acres. So, and then you look at the spring wheat, that was off quite a bit. Well, not quite a bit, but it was off enough than the average trade guess to keep the wheat market going. Also, the Durham, basically, that's Minneapolis. A little bit under the March intentions. So that really wasn't bullish numbers, but yet supportive to the wheat market. Here's the other ones. You can see them as we go down the line here. Total acres, that's going to be planted. Looks like about 2 million acres or so less than last year. So overall, the report was not bullish by any means for the corn, but the corn market responded, got some support from the wheat, responded from the weather. The weather at noon came out, and it was a little bit drier, a little bit warmer than the previous run. But I kind of guessed or estimated that they would trade the report for the first 10 minutes and then go right back to weather. And that's basically what they did today. The initial shock on the corn, we were probably 7-8 cents before the report came out. We were higher. Initial shock, we got to 2 higher, and then 5 minutes before the close, that's when corn made its big move up and ended up closing 12 cents higher in December. Beans, on the other hand, we were trading steady to maybe down fractionally when the report was released. The numbers came out, and they were not bearish numbers that the trader was looking for. They were looking for 1.5 to 2 million more acres of beans planted. It didn't happen. The stocks number was a little bit smaller than they thought. The bears did not get a bearish report, so they ran for cover, and the bulls came in, and we ended up closing 30 cents higher. Like I said before, there was not a bullish report, but it traded positive, and with today's action, it makes you wonder. Now I'm just going to go a state by state breakdown here. I'll let you look at it for a while, but this is the corn planted area. You know, everybody thought that we would lose acres on the fringe areas, but North Dakota came in and they had 250,000 more acres of corn planted than a year ago. And you can see that in fall in what they took out of production. Kansas had 200,000 more acres of corn. And basically, them acres came from the wheat acres. We knew last year when the wheat, the prices were not advantageous of planting wheat, and they switched to corn on a couple of instances there. You can see Iowa, Illinois, they lost just about 1 million acres combined. And this doesn't surprise me. And I don't think anything shocks us here on the attended corn acres planted. Go over the soybeans. The increases did come from the fringe areas. You see North Dakota, South Dakota, Kansas had more beans. It just goes to show you the fringe areas is where a lot of it came from. So other than that, you know, it wasn't a big surprise, but obviously some of the traders were looking for a bigger bean number. It didn't come where they thought. But you got to remember, we are planting 6 more million acres than a year ago. So that's a big number. If we have the trend line yield of what USDA is using at 48 bushels, we're going to have plenty of beans. Okay, the next slide here is all winter wheat planted area. You can see that obviously the wheat numbers are going to be down in most of the states because the 100-year low of planting winter wheat. And that's why I was fundamentally bullish on new crop wheat, and I still am. But you can see most every state had a decrease in wheat acres. Okay, here's the other spring wheat. This is not your durum, but it's the other stuff. You can see that North Dakota lost quite a bit. The Pacific Northwest lost some. And then I'll go into a couple more slides here, and you'll understand why I think the wheat market is doing what it's doing. Now, here's your durum wheat. This is basically the Minneapolis Wheat Exchange. You can just, and with the previous slide, these 2 wheat contracts are basically traded in Minneapolis. You can see the wheat acres are down, and obviously, if you've been following the markets, you know that North Dakota, South Dakota, Montana, and now Idaho, Washington, and Oregon, they are having some very difficult weather. They're actually in a drought, and it's not subsiding. And this is why we got the rally going in the Minneapolis wheat. And this week, the rally actually moved into the Chicago and Kansas City wheat markets. We took out our previous highs yesterday, and we had follow through today. So I would say the wheat exchanges are all basically in a weather-related market at the moment. I'm just going to go through a few corn charts for you, or a few charts. The first one here is a corn chart. It's a daily corn chart. You can see we put the high in back here 2 weeks, 2.5 weeks ago. We sold off hard really last week. Last 2 weeks we sold off hard. We bottomed out last Friday. It took us until today before we actually made a statement. It was a good close. Very impressive with what the reports gave us this morning. I look for some follow through to the upside here, but obviously it's all weather related. If wheat continues to go higher, corn's going to follow to a degree. But I tell you what, if the weatherman does not come through and bring us the hot, dry weather, this corn market will go back down and test these lows and probably make new lows. It's impressive close today. I'd like to see some follow through to get myself excited about it. But right now, we'll just have to see what Monday brings. Soybean chart. I believe this is the soybean chart. This is in November. Wait, this is not a soybean chart. Let me see. I'm kind of confused here. There we go. Here's a soybean chart right here. I don't know what the other chart was. But anyway, this is a soybean chart. Couple things to look at here. We sold off last week, and we rallied back. Very impressive this week. Obviously, we had a higher weekly close. The highest closing price we've had since May, mid-May, basically, late to mid-May. Was a little disappointing as we did not take out last week's high of 958.25. We got as high as 958 today. Do we have a double top going here? We very well could be having a double top, but again, we ran out of gas here. Friday or Monday, Sunday night, Monday, depends on what the forecast says. If they got rain in the forecast and too cool temperatures, we'll probably see a gap lower opening. Okay, this is Chicago December wheat. In the previous slides, I told you that we took out the previous high yesterday, had good follow through today. I guess I would have to say that the wheat market is weather related. I don't quite understand how much or why we're rallying this crop. We got plenty of old stocks on hand, but obviously the funds are pushing it higher, and we'll see how far they go. And I'm going to show you one more slide. This is a Minneapolis wheat. Or wait, this is not Minneapolis wheat. This is Kansas City, I think. I don't see my. No, I don't have my. I thought I had a Minneapolis wheat, but the Minneapolis wheat chart has been on fire. We're pushing $8. I don't see much of a reason to sell off much. The crop is hurt in the Pacific, or in South Dakota, North Dakota, Montana. It's starting to get dry in the Pacific Northwest. Them two states, the 3-4 states out there, they do produce about 13 to 14% of the spring wheat, and that's now starting to dry out too. North Dakota and South Dakota, Minnesota, they produce, down near 60% of the wheat. So this market, I would say we got some strength to it yet. $8 is next hurdle for that wheat. How I would trade this market, I like buying for the corn market. If you want to enjoy the ride up, if we do have a ride up, I'd go out and buy some either August or September corn calls. Wouldn't try to get something bought for under a dime. I would not sell any puts below the market yet, but that's one way you could do it. On the soybeans, it's hard for me in our office to be bullish soybeans. You can buy some calls out of the money, but it's hard for me to see that unless this weather market really kicks into gear. And even corn, it's all in the weather. We're going to have some losses, and right now it's too early in the season to see any losses in this grain market. We are protected in the office and our clients with puts in both corn, beans. The wheat market, The office is pretty well open in the wheat market right now. We were long. We were long some calls that expired last week. We should have rolled them, but we didn't. But anyway, buying calls to me is the safest way to go on that. But this is Alan Heffling once again from Comstock Investments. Hope you guys have a good weekend and a nice 4th of July. If you have any questions, why don't you call in the office? You can see our number there. And you can talk to one of the brokers or David, and we can go from there. So signing off for now, this is Alan, and wishing you a good weekend. Thank you.